Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Sunday Roast. It's Sunday the 9th of June. I'm Phil Carroll.
And I'm Kevin Hornsby.
You're finally back from my early summer holiday. Tell you what, Kev, if you ever get the opportunity to go to the Seychelles, you got to jump at it because it is an island paradise. One of the most beautiful beaches I've ever seen in my life. Scenery, fauna, wildlife, absolutely stunning. So well worth a trip. Been there once before on a business trip many years ago, but it'd be great to get back and see how stunning it was. And you're over in Liverpool right now. What have you got planned for the week?
Well, after I record this, off to play golf with my cousin. And well, I'm going to hit a white ball and look at the scenery actually, because I haven't played golf in many moons. So let's see how that all pans out.
It's the old adage: it's a good walk spoilt, isn't it?
Yeah, well, probably right now that's exactly
how you're going to be viewing it.
I'm going to be viewing it, but I'm looking forward to it. Should be interesting.
Anything else got planned for the weekend ahead? I think you're going over Ireland, aren't you?
Yeah, I'm off to initially Northern Ireland to, I think, at YWAM Youth with a Mission, and in Rostrevor. There's a border walk that's been going on for 10 years now, and it's an anniversary of that. I did it once, so I wanted to go to that, and it's coincided with me going to see some of the Carillion Diamond stuff as well in Fermanagh direction. So yeah, all interesting stuff.
Very good. So that's the nickel play, isn't it?
Nickel and copper, I think it is.
Yeah.
Nickel, copper, zinc, is it?
Nickel, copper, zinc, yeah. And there's a couple of shareholders, TR1 holders meeting you, I believe. That should be quite good to meet them.
Yeah, and I'm speaking with Carroll today, so yeah, I'll be meeting up with them.
Good.
On Sunday, I think it is. So, yeah.
Very good, very good. All right, well, let's have a look at some of the news stories that have dominated the headlines this week. I mean, there really is probably not many other stories in this one. It's the election 2024. Tuesday, we saw the two candidates going head-to-head, Prime Minister Rishi Sunak and Keir Starmer, Labour leader. I watched the interview myself. Wasn't really blown away. It seems like the two candidates were just talking and shouting over each other, and particularly Rishi Sunak. They kind of lost the plot on the whole kind of communication thing. And Julie Etchingham was the moderator, the host. Just didn't seem to have any control of the two candidates. And they also didn't have enough time to answer the questions. They were put under sort of like 45 seconds to answer questions. I mean, how can you answer questions on manifestos and pledges in 45 seconds? It didn't have a lot. There wasn't a lot of thought gone into it. And even the Labour staff members were said to be very unhappy about how Keir Starmer was prepared for Tuesday night's election TV debate after he repeatedly failed to refute any disputed claims. So he came out fighting, did Keir Starmer calling Rishi Sunak a liar for making the claim and accusing the Tory leader of breaking ministerial rules. So what I don't know, you probably didn't see it being over there, but at the time when it happened, but it was just very, very low budget.
Yeah, I didn't hear anything about it, thank goodness. So yeah, I have no comment to be made because I mean I think it's one of those fait accomplis. I almost compare it to the Chilbrands vote, which took place this week as well, which was also a fait accompli. So yeah, crazy.
What did you make of Farage? Because obviously we see Nigel Farage saying no, not got time to do that, and then he comes back. He took part on Friday night in a debate, the BBC debate for Reform UK. It's his first debate appearance since he announced that he's obviously standing to become an MP. What do you make of that? Because obviously I'm just looking at the front page of today's paper, and reforms have surged again. So they've gone up in the polls, as you know. They're saying it's the Farage effect. So right-wing insurgent party has climbed 5 points in a week since Farage announced he will stand against the Tories. The iPoll shows and Conservatives' pay price dropping to 23%. So on the graph at the moment, we've got Labour at 42%, Conservative at 23%, and the Reform Party at 16%. So they're really kind of like winning, the Reform Party are winning these Conservative votes.
Yeah, it's just going to make it even more of a landslide, isn't it? But let's see. They might take a position because I think people are just sick of the whole situation.
Yeah.
And he's a supreme publicist, isn't he? You know, he's the self-publicist. He's not short of putting his nose out there and doing things. And he's a good orator with it. orator with.
I think he's very good.
Yeah.
I do think he's very he's.
I don't agree with his opinions or his policies, but that's not the point. He's a good orator, is it?
Yeah, he's what you would call a raconteur, a great storyteller. So that was that news, and that'll be an interesting one. Obviously, we're about a month away from the election, so let's see how that one pans out. I'm pretty sure that all the polls I've seen, it's looking like, as you say, a Labour landslide. But there's one thing for sure, taxes are going to go up no matter who forms the next government, is my opinion. But anyway, so another news story, and again, this has dominated the news over here in terms of television and radio. There was the 80th anniversary of the D-Day landings, Operation Overlord. We saw scenes on Thursday morning, June the 6th, marking the 80th anniversary. There was a lone piper playing the bagpipes in memory of the fallen, and about 23 veterans made their way across the Channel to Normandy to celebrate and remember their fallen comrades. Some amazing scenes and amazing performances from, so Jack Savoretti and Tom Jones was singing in the morning. Not a dry eye in the house. I mean, if you think many of those veterans were in the late 90s, some of them in the centenary, so some of them are centenarians and 18 years of age and younger when they headed into that battle, knowing that they were almost certainly going to meet their maker. What did you make of those scenes? It seemed very poignant this year, 80 years on.
Yeah, I mean, it's going to be the last year for many of them, the last few years anyway, and then there will be no living survivors in the next. I mean, by 90 years, you'd be very surprised if there's any of them left.
Yeah.
Almost certainly it's the end of it. And it feels like a different world, doesn't it? Can you imagine getting a group of 18-year-olds in the UK now to storm the beaches in France?
Ironically, we talked about this last week, didn't we? The National Service and the announcement for 18-year-olds potentially if Sunak remains in power. But there's no way that they'd be able to do something like that. I mean, one of the guys who was interviewed, his great-grandfather, he was saying that he was 14 years of age when he went on to and helped with Operation Overlord. 14 years. He obviously faked his signature or faked his age when he signed the conscription papers and went into battle with his older brother who was like 17 or something. I mean, that's just 14 years of age fighting for your country. It's just beggars belief.
Yeah.
If anyone wants to try and understand the mayhem, if it can ever be done, I watched the first 20 minutes of, do you remember the movie Saving Private Ryan? It was released in 1998. It's a Steven Spielberg. And that opening beach scene, I mean, it is so visceral that the sound effect, just the mayhem that they walked out of those landing craft and were mown down. As soon as the doors opened, a lot of them were just mown down by the German machine. But some of the scenes from the initial 20 minutes are just heart-wrenching to watch. But yeah, probably it was real, but it was, I'd imagine it was a lot worse, in terms of how much chaos there was there. But yeah, that was well worth a watch if you want reminding.
Yeah, it was pretty harrowing to watch things.
Yeah. And on to our first guest this week. Alkemy Capital Investments, ticker ALK, focuses on investing in the critical minerals sector to foster the growth and sustainability of its subsidiaries. Key projects include Tees Valley Lithium Limited, which is developing the UK's first lithium hydroxide processing facility, Graphite Limited, in partnership with Syrah Resources, to establish a graphite anode material processing facility, and Port Hedland Lithium Pty Limited for a lithium sulfate refinery in Australia. With rising demand for lithium due to the shift towards EV in the UK and EU, Alkemy's strategic initiatives aim to establish resilient and environmentally responsible supply chains. TVL has secured key partnerships, including with Wogan Resources, and is in advanced discussions for project financing through green bonds. The company continues to progress its projects with a strong focus on meeting future market needs and supporting the EV transition. We're delighted to be joined by Paul Atherley, Non-Executive Chairman. Welcome back, Paul.
Thank you very much. Good to be here.
Absolutely. So we saw that some detailed RNS last week titled Annual Report and Financial Statements, with a statement from yourself as chairman. And as for the introduction, I covered the subsidiaries and the core business plus partnerships. But what do you feel have been the key milestones for Alkemy in the last year?
Our focus right now is on Tees Valley Lithium. And you may recall, Tees Valley Lithium is 96,000 tons of lithium hydroxide per year from 4 trains at the Wilton International Chemical Park in Teesside, Freeport. We're focusing on the first of those 4 trains. It's going to capital cost of $300 million US, of which we've got a bond financing for 60% of that, so $180 million. And we're talking to institutional investors about the equity component of that. But in order to get to where we are now to that bond financing and to commence construction, we need to complete a feed study. And that feed study is going to cost $8 to $10 million US. And it's going to draw on the fact that, as you mentioned, we've got Wogan International as our supplier. We've got coverage, 2 to 3 times coverage offtake for that first train. We're fully permitted, fully engineered, ready to go. So the feed study is the last study report we need before we draw down the finance. So the question for us is, how are we going to finance that 8 to 10 million to do the feed study for train 1 for Tees Valley Lithium? Well, Tees Valley Lithium is a wholly owned subsidiary. It's a private company owned by the public company, and we're looking to finance at that private company level. So we're in discussion with a number of parties for them to put in that 8 to 10 million US dollars at the asset level, whether that's by way of investment or whether by mezzanine finance. We're in discussion with them. Once that lands, then we have an 8-month feed study, and we're into drawing down the bond finance and building the project. I think the key there is, as you have picked up straight away, is we don't come to the equity market to raise any equity at the Alkemy level. That's the whole purpose of Alkemy, is it incubates these subsidiaries that then go off and finance themselves at the asset level. And in fact, increasingly, if you look around the UK, there's more and more of these financings at the asset level than there are at the listed company level. In fact, listed companies, junior listed companies, are becoming harder and harder to finance. And I'm not saying it's easy to finance at the asset level, but there's certainly a lot of money available there. So that's the plan, and we're making good progress.
Good. So what sort of timescales do you see this financing being able to come to allow this the next stage, if you like?
We can't come on financing, as you know, Kevin, because it's never done until it's done. It's like you can be 99% there, and then it doesn't happen. So we're not giving any commentary at all on financing, except to say we've got a number of parties who are well advanced, and when it lands, we'll make the announcement.
Okay, that's good, Paul. So, I mean, when I look at Alkemy Capital as an investment vehicle, which basically is what it is, you obviously have these 3 projects. Any of them come into fruition when you're talking about finances of $300 million US is going to make a laughing stock of the situation that you're currently valued at 6 or 7 million pounds. So why do you think that you're still here?
Just to echo your point, Zeus did an initiation note recently, and Robin Bide went up to site, has met with everybody, came back and looked at all our studies, and he's come up with a very conservative valuation of somewhere between 10 and 12 pounds per share just on Tees Valley Lithium first train alone. So you're right, there's a huge uptick. I think there is a credibility factor saying, how can a £5 million company finance a $300 million US asset? And the answer is we need to show that. And I think once we show that we've got the mezzanine finance, and then we can announce the bond finance, we'll unlock that £10 to £15 per share valuation.
Yeah, and I mean, there has been a shift in the last sort of 6 to 9 months from what we've seen in this whole lithium side of things. How do you see that affecting the business? I mean, people obviously still require lithium, but it's not as, lithium is the most amazing resource and we all need, millions and millions of tons of it, as it was, say, 12, 18 months ago. So how do you see that affecting the project?
The lithium demand is out there still. It's exactly the same. We still need the electric vehicles. We still need the battery storage. We still need all of that. What's happened is there's been an oversupply by the miners, particularly in Australia, and they basically smashed the lithium price because they've oversupplied. Now the lithium price is recovering, and as you know from experience, the demand side will kick in again and the lithium price will go up. We're aware of that. We've never gone into this looking to be a slave to the lithium price. In fact, we are a merchant refiner. We just take a margin along the way through. So that valuation that Robin Bide from Zeus reported in his initiation notes is based on any lithium price, because we're a margin player. We charge a fee for converting technical grade carbonate into a lithium hydroxide battery grade product, or whatever conversion we do. We are a toll refiner or a classic merchant refiner. So we're not dependent on the commodity price at all.
So really the lithium price to very, very little extent should affect Alkemy Capital, or certainly the Tees Valley project.
It's not a factor for our financiers, no. They accept the fact that there's going to be this demand, this need to create conversion from technical grade carbonate, crude carbonate, primary lithium sulfate, these chemical products coming into the UK, we convert them into a battery grade product and sell them into the European market. That's our business. And there is a tolling fee for doing that. That's the valuation that financiers look at. And incidentally, Robin valued Alkemy not on the net present value of the company, as you and I would if we were looking at a mining company, saying, look, the net present value of future cash flows is this big number. He valued it on the dividends, the dividend stream to Alkemy shareholders. He said, Tees Valley is going to generate free cash flow, and the business model for Alkemy is to distribute that cash back to shareholders. So he actually valued the dividend stream rather than the underlying net present value.
So I'm guessing if this all happens, then each annual dividend is going to be similar to today's share price, then maybe even higher.
Yes, it's certainly of that scale. Yeah, I'd have to look at the assumptions that Robin's made in his notes. I'd have to come back to you on that exact dividend per share, because he's assumed that there would be some shares issued at Alkemy, and he's been super conservative. So no, it's a very strong. I said to you in the beginning when we first said we've known this problem for junior mining companies, particularly in the UK, where you don't get valued for the asset. The problem is the companies have to continue to issue equity, and eventually you dilute existing shareholders away from the underlying value of the asset. So we've approached this differently and said, Alkemy will remain as tight as it possibly can, and we will finance wherever the dilution needs to be, whatever the dilution needs to be, will be at the asset level, not at the Alkemy level. So therefore, when the cash flow flows up to the Alkemy level, there's only a small number of shares on issue, and we'll turn that. And the idea is to turn it into a dividend stream.
Yeah, so we can't say categorically there's not going to be dilution at the Alkemy level, but ultimately, if there is, it's going to be minor, and should be kept, as you say, as a tight shareholder book. I mean, you are a pretty large shareholder in Alkemy Capital, I presume, so you don't particularly want to dilute yourself.
Yes, and I'll buy more. You know, I'm probably one of the rare chairmen of these junior companies actually buys his own stock. So I've put over £1 million into Pensana, and to the extent I'm able to, I'll continue buying in Alkemy, because I think it's a really good investment.
Similarly, obviously, when you're not in one of those often close periods that a lot of chairmen and directors find themselves in.
Yeah, and it's even more constricted. Yes, exactly right. I mean, it's even more restrictive than that. You have this thing called concert party arrangements that I constantly talking to Sam Quinn about, and saying, can I buy, can I not buy? And he said, no, you can't buy, or whatever. So yes, it's tricky, but to the extent we're able to, we as a management team will want to buy more because we want to participate in those dividend streams.
Very good. I mean, we look forward to speaking to you again in the not too distant future, and good luck with the Mezzanine Finance. It's interesting to hear that, the bond money is ready. The institutional investments at asset level, I don't think will be much of a problem to you, because ultimately many of these companies want the asset level investments and not necessarily the stock market company investments. So I think you're all set up. You just got to go and execute, Paul. And I have no doubt you'll have a good chance of doing that.
Appreciate that. Thank you very much for your time, Kevin. Appreciate that. Nice to chat.
Paul Atherley, Non-Executive Chairman of Alkemy Capital. Thanks very much for your time.
Great to chat, guys.
And on to our second guest this week, we're delighted to welcome Sara-Louise Porter, Head of Corporate Development at Aquis Stock Exchange. Sara-Louise has a rich background in the financial services industry, particularly in working with SMEs and the development of stock exchanges. She brings a fresh and innovative approach to a role at Aquis, focusing on driving growth and investment. For those who may not be familiar, Aquis Stock Exchange is primarily a secondary market for equity and debt securities dedicated to promoting entrepreneurship, investment and growth. It is one of the only two exchanges of its kind in the UK and is strictly regulated by the Financial Conduct Authority. Aquis aims to drive retail and institutional investment, raise eligibility standards through cutting-edge technology and stringent regulations, and boost liquidity in the market. Exchange is sector agnostic, welcoming companies from all business areas, including special acquisition vehicles. Currently, Aquis lists over 100 companies with notable names such as Aquis Exchange, Arbuthnot Banking Group, and Shepherd Neame. The sectors represented on Aquis are diverse, including healthcare and pharmaceuticals, drink and hospitality, and industrials and mining. We look forward to learning more about Aquis and its unique approach to fostering growth and investment from Sara-Louise today. Welcome, Sara-Louise.
Thank you very much.
Absolutely. So just tell us a little bit more about yourself and what sort of got you into this role, really.
So I kind of started my career out of uni organising financial events, and I did the first event at the Barbican for the AIM markets back in the day. I'm not going to say what year because I can't really remember, but
Oh, you
it was
traitor.
it was pre-2000, let's say that. And then I met the Jenkins family who ran OFEX, which is sort of the first incarnation of this license, shall we say. And OFEX wanted to have a similar show to the one that we'd done at the Barbican for AIM. And so I went to work for them, went to work for OFEX, and we did the first event. And we were the first event actually to have a queue out of the door at the Business Design Centre in Islington. So that went well. You know, OFEX didn't have an RAE licence at that stage, but it went on to become Plus Markets Group, and then it gained its licence, I want to say in around 2006, 2007. And I left in around 2006 and went to Hong Kong with my family for around 7 years, doing something completely different, working for a large US party company, actually, where I was looking after kind of retail and distributor accounts for clothing, and then came back and worked for the Social Stock Exchange, which wasn't in fact a stock exchange, was more of a platform for profiling or raising the profile and introducing investors to companies that had really high ESG credentials. It was a bit before its time, to be fair. And we had a partnership with Next Exchange at the time. Then I met Patrick, started working at Next Exchange just before it was bought by Aquis, and here I am today.
Absolutely.
So I've always had a focus on building relationships, trying to help companies raise their profile, attract investment, get to the next stage, scale up.
Yeah. You've also, I believe, led multiple formal and informal women in business networks. Just tell us a little bit about that work, please.
Yeah, so I started off at Aquis, and we've had a number of events. We sort of started with the women in our own organisation, and then we sort of looked further afield, and we've done a couple of events sort of particularly focusing on funding, because funding for female-led businesses is really low. Typically, they only attract around sort of 2 to 4% of VC funding. So we've sort of concentrated on that, and we've held events where it's female-focused or female-founded companies in the audience and female investors presenting. And yeah, we're going to do another one of those this year. We also sort of celebrated IWD and had a debate as well. So yeah, just sort of trying to get that network going and really sort of concentrate on why PLCs, particularly kind of women, are woefully underrepresented in PLCs. We've only got 2 on our market, unfortunately, and just sort of trying to understand from a grassroots level why that is and why there aren't more, and trying to help facilitate that.
Absolutely. So let's move on to the Aquis Exchange itself then. Why would somebody who's potentially coming to market now in an IPO choose Aquis over the likes of the AIM or the standard section of the standard list of the main market?
I think for a number of reasons. I think the fact that we are new in our current form, we're 4 years old, we're the new kids on the block. Our CEO, Alistair, created this or wanted to get his hands on an RA license to change things for the better. We ourselves went public in 2018, and we found it hard work. It took a long time and it was very expensive. And I think he thought at the time there must be a better way. And so we've tried to make the admission process as streamlined as possible, as straightforward. We've tried to strip out, unnecessary, burdensome regulation that doesn't apply to companies of this size. That's not to say, we don't diminish on the investor protection, but we've, reduced risk warnings and things like that to make it easier and, quicker. That therefore saves time and therefore cost. So time and cost is a big consideration. Also, I think we know our companies pretty well. We develop those relationships. We meet all our companies before they come onto the market. We understand their objectives, and therefore I feel like we support them better. We have quite a strong capital market support, and we take that seriously, that relationship seriously. So our doors and our regulation team doors are always open. You get an answer fairly quickly from a person. And I think that counts for quite a lot with the companies that we're talking to that are in that sort of growth stage. So time, cost, relationship, better admission process. We're also more friendly towards acquisitions. We don't have class tests, that sort of thing. So I think we've created a market to attract the types of companies that are sort of being born, now and growing now, rather than trying to fit these new types of companies into a very sort of traditional structure and system.
Yeah, absolutely. I mean, you always heard from investors, retail, who were initially probably going back 2-3 years ago when you were in your infancy. There was always a lot of complaints surrounding the way they could trade some of these securities, in terms of, it was always very much pick up the phone, talk to your broker, whether that be Hargreaves. There was not many brokers that would actually handle some of the securities, like IG wasn't listed. There was a lot of them. AJ Bell wasn't listed. So, but you've obviously improved that of late. So just talk us through some of the fact that you've now enabled a lot of the electronic order book system, and also just how much liquidity there is, because it was always a bit of a liquidity trap, wasn't it, Aquis? There wasn't many trades in the stocks, whereas on AIM you'd see 10, 15, 20 plus trades on some stocks, whereas on Aquis some days or even weeks you wouldn't see one trade. How are you trying to fix the issue?
Yeah, so I mean, it's a completely different marketplace now, and there really wasn't the connectivity before. So that's a massive change that we've kind of put in place over the last couple of years, really. The fact that, that all the big platforms are now connected, which they weren't before. So, Hargreaves, AJ Bell, Interactive Investor, IG have been really supportive in putting on, the majority of our stocks, Barclays. So I think we've probably got about 90% of the retail trade covered. There's a few platforms that we still need to get to, but so connectivity is definitely there now. And for stocks that are, consistently talking about their developments and their progress to a retail audience, you'll see a direct correlation in terms of the trading that takes place. There's no barrier to trade like there was before. And so, liquidity is always a thing, isn't it, for small caps, and for some companies where we do allow quite a low free float into our access segment, which is our entry level segment of the growth market. And we do that to kind of protect the company and ensure that they can sort of grow at their own pace. But, whatever market they were on, they're not going to see a lot of trade if they've only got 10% of shares in the public. And so, that's why we put a lot of education, into these companies and to get them to a stage where they can trade more and they do have more free float. And certainly, the companies that you've been talking to recently, like in Canthera, no issues for trading there, very regularly. And other companies like Solnox, KR, Marula, I know you know the guys there as well. There's really no issues to trading those companies at all. So it does work, and it's very much dependent really on the company and the stage of development, their IR activity, that sort of thing. And that's what we sort of try and educate, as I've said, as much as possible to help them get to that stage.
And how many roughly companies are listed on Aquis in the two different things?
So just over 100.
Okay, so in 4 years you've gone from 0, or I should say 1, probably, which was Aquis itself, to over 100. How many of you managed to get on board in the last, say, 12 months?
So I mean, this year's been tricky. So this year is a challenge. So we've only had one so far this year, but we've got quite a few backed up that are trying to find funding, which is really difficult at the moment for IPOs. We had 16, I think, last year, 24 the year before. So yeah, this year is a tricky year. At any one time we have around sort of 30 to 40 companies on the pipeline, and it's the funding is the real problem at the moment. So we're having discussions with different parties to see how we can help find that cornerstone funding for those companies as well.
So if a company was interested and funded from beginning to end, how quickly can they go from here's my idea, here's my prospectus, to somebody trades their shares on Aquis?
So average time is around 3 to 6 months. That's what we say. So yeah, it can be done in 3-4 months if the company is kind of IPO ready, shall we say, in terms of their corporate governance and their accounting kind of procedures. And if they can fund themselves quite quickly, then absolutely it can be done in a few months. in terms of our team, once we've got that draft admission document and it's up to scratch, we can turn it around in, 10 days. So I think the templating and the work that we've done to kind of reduce the sort of information that has to go into the admission document and to really focus on what's important has really helped to kind of streamline that and make it faster.
And in terms of sort of a comparable to AIM, how much cheaper is it to list on Aquis? And the ongoing costs, what is the differential, in terms of having to pay what you have to pay on AIM, what you would have to pay with you guys?
So it really depends on the advisor that the company uses, and obviously we can't control those costs. Most of the costs, on any market are kind of external to the exchange. But what we have done is we have a wider range of advisors. So it's not just the nomads that are on the corporate advisor members of our market, it's smaller kind of specialist boutique advisors as well. And so that can really reduce the cost. I mean, it can be up to half as much. But as I said, it really depends on the company, their readiness and who they're using. We're much more responsive, as I understand. So again, kind of having that direct exchange relationship and the reg team, being involved through that process and looking at draft admission documents really helps speed that up. And that's what helps save the time. From an ongoing perspective, we don't require a broker to be retained. So that could be quite a big saving. So yeah, it can be significant.
Okay, good. So do you envisage that this 100 will become 200, 300 within the next few years?
That's absolutely our ambition. Yeah. And I think everyone just needs things to be a bit nicer in the economy. I'm quite pleased that the election is next month and we're not having to wait till November. And yeah, we're working hard to kind of facilitate that funding coming through and to help, as wide a range of companies as we can.
You've always seen as a bit of a challenger market. I think you almost alluded to that in the sort of, the way you introduced Aquis and the vision it had. But I think we've seen it, probably Kev was going to allude to that in a minute, is the fact that we've seen a big glut of big companies leave the AIM market, delist and go into a private entity. I mean, that's obviously a worry for London itself. I mean, what does it say about the London markets when companies are leaving and going to New York? I mean, does that concern you? And are you trying to entice and hold on to the companies you've got in fear that they may delist from you?
I think we always try and keep hold of our companies by servicing them well. And yeah, that doesn't change. I think we kind of need to change the narrative a bit now. There's lots of companies, that have potentially chosen the US over the UK. Whether they've actually performed that well, post IPO, I think that's debatable. So I think we just need to be a bit more glass half full than glass half empty. And it's kind of a bit of a British thing, isn't it, to be a bit negative. So we're certainly very positive.
That's why Kev lives in Egypt now. He's Mr. Eternal Optimist.
Yeah, it does my head in. But yeah, we're doing all we can. We feel that we've got the best process, the best service. Yeah, and if we can just sort of, if things can be a bit more positive in the economy and we can get that funding through, then absolutely we want to see a big rise in companies coming to our markets.
Yeah, because I mean, you were intonating that you probably have 30 or 40 companies in the pipeline, but they need finance. Obviously, they're operating, I presume, already as businesses, but they need finance to move to the next level, which unfortunately the UK market has been very negative, and the people have been very negative in terms of willing to invest that challenger cash, if you like to say, here's, £1 million or here's £500,000. Because the other thing I think on Aquis is you don't have to raise as much money as on some of the other markets or have as big a market cap. So this really is the end of the market that we can see, exponential returns if some of these companies do well. And that was really my next point. I mean, these 5 companies, I think it was, that presented for the Aquis Company of the Year. Just give us a bit of a rundown on those 5 if you can remember them.
Yeah, absolutely. So, I mean, there's us. We're on our market as well, so we're a good opportunity. There was Solnox, which they've developed. They're a kind of green tech company. They've developed a conditioner that can help kind of reduce the black smoke and make, oil, a lot cleaner, takes the bad stuff out. They've really seen a lot of growth recently. I think their stock's gone up by about 250% over the last 12 months. So they're really going places. We had Equipmake, which is a UK technology company, an engineering company designing and manufacturing drivetrains for electric vehicles. They did a nice fundraising of over 4 million this year, on top of a previous 6 million, on top of a previous 10 million, growing well. Obviously Incanthera, I know that the guys at Incanthera well. They've done amazingly well to commercialize their product recently. And, we're really excited to see kind of where they go. Shepherd Neame, Britain's oldest brewer, obviously still growing, still doing really well. Good revenues. I think they announced that the last revenues were nearly 90 million for the half year. And
people still buying that Spitfire beer then, are they?
I think so. I think it's a non-alcoholic beer they're buying a lot as well.
Did you say One Health drink?
One Health. Yeah, sorry, I was just about to say that. Yeah, One Health also, which is obviously helping the NHS reduce their waiting list. So
that looks like a very interesting story, does that One Health group?
Very topical. Yeah, as you say, very interesting, good growth. I think they're on, for around 23 million of revenues. Yeah. I think, and that's, that's not all of the good stocks that we've got. You yourself mentioned KR1 and Marula. We've got Rent Guarantor, All Things Considered Group. There's lots of interesting companies now.
Yeah, no, there's no doubt there's some companies there that have done extremely well in terms of returns as well. I mean, even we were waxing lyrical about, or we have been waxing lyrical about Incanthera. They're up 250% just this year from January. So there are opportunities. There is liquidity there as the opportunities are seen. I think that is the thing that needs to be painted. That people, when you're only focusing at this moment in time on 100 companies, then the opportunity for those companies must be increasing rapidly compared to what seems to be happening on AIM, which is, go on, pay us your money, and on you go, get on with it, which pretty much seems to be the way it is. And that's not a big criticism of AIM. That's the message that seems to be portrayed, because there is no message. So yeah, I think it could be very, very interesting in the future as you move on and become bigger. It's almost like a snowball rolling down the hill, isn't it? If you have 200 companies, if you have 300 companies, you have 400 companies, it's going to be a very, very different market in terms of liquidity and the ability to have the variety of companies. So yeah, we wish you luck.
Thank you.
And let's hope there's, for everybody's sake, that more liquidity, more finances come into the market for some of these smaller companies and smaller ideas. At the end of the day, this was what Brexit was supposed to bring, was it not? That we had British companies.
Yeah, I'm not going to comment on Brexit.
Like it. No political range.
I don't like to comment on it either, because it was a disaster. But anyway, such is life.
Yeah. Well, we're agreed there, yeah.
Okay, well, let's have a light-hearted finish. We will say, obviously, we're on the Sunday roast. You're on the Sunday roast. What is the ultimate Sunday roast in the Porter household?
Oh, I think I would have to go for a roast beef with Yorkshire pudding.
That's a good idea.
Yeah, I'm not an amazing cook, but I do make a mean Yorkshire pudding from scratch. Yeah.
So I can talk to you now about this. I make the batter the night before, leave it at room temperature.
Do you?
Get the oil as really hot as you can, in the oven, like 250, like your beef dripping, and then throw it in. Don't open the oven, 10 minutes, and you get some big risers.
So I don't make mine the night before. I do make it sort of well in time in the morning, but yeah, maybe I should try the night before.
Leave it at room temperature. It's just
So where are you from originally?
Originally Kent, but I've moved around quite a lot. I'm in Buckinghamshire now. I've lived in France and Spain and Hong Kong and Dubai. So yeah, a bit all over the place.
So the reason why I asked that question is there got to be lots of gravy on this beef in Yorkshire pudding?
Absolutely, swimming with it.
Okay. Some horseradish, strong horseradish,
and the cauliflower cheese with roast beef.
Now we're talking.
Horseradish. I have to say I like the creamed horseradish sauce, not the stuff that blows.
It's got to make your nose go. You know what I mean?
Yeah.
Why would you do that to yourself when you can have the cream stuff and it tastes just the same but nice? Anyway, not to worry. And
Yeah,
what
my
would
mouth's
dessert,
watering now.
dessert be then in this perfect meal?
I really like a tiramisu, I have to say. I think tiramisu is my favorite.
It's a good one. It's a classic one.
Yeah, although I don't drink coffee, which is quite weird that I like tiramisu, but I think it's the cream.
Or the Tia Maria maybe in the bottom, a bit of
Well,
alcohol.
yeah, I wasn't going to mention that, but yeah, possibly that as well.
I want a portion of fresh strawberries with raspberries on the top and some cream on the top, and that would be enough.
Yeah, I'm not really a mixing fruits. I don't really feel it's a dessert if it's got something healthy on it.
You could just have more cream on it than that.
Yeah, I'd drink the cream and then eat the strawberries separately.
Okay, very good.
On that note, we'll say Sara-Louise Porter, Head of Corporate Development at Aquis Stock Exchange. Thanks very much for your time.
Thank you very much. Nice to meet you guys.
Thanks, sir.
Should we have a look at some of the movers and shakers this week?
Yep.
Yeah, I mean, according to SharePad, the best riser was RTOP, which is RegTech Open Project PLC. They're up some 460%. Another company that's actually on my radar at the moment. So interesting to see that one. Eurasian Mining EUA, they're up some 131%. And PetroFac 113. So they're the top three movers. Monday Source, go on.
EUA was an interesting one because it was all sort of rumour and counter-rumour, you know, and then it went berserk. I mean, ultimately the assets are in Russia, so I'm not sure quite
But,
how
I mean,
that's...
they've not had any significant news out since March time. There was
it wasn't on an RNS. It was something that was internal that somebody had spoken about.
Okay.
But I don't know the full details of it. So I'm guessing I just heard snippets on the bulletin board.
Yeah. Okay. Well, Monday we saw news of the Chill brand suspension. Bit of a shock RNS, this one, based on the fact that they said that further to an announcement made on the 22nd of April regarding the company's investigation into the number of commercial arrangements that the company entered into connected to its UK vape business, and two allegations that have been raised again around the use of inside information. The company's board of directors are unable to currently provide the market with an accurate update of its financial and trading position. So obviously at that point, it was made the request listing the company shares were temporarily suspended from trading on the main market with effect from 7:30 a.m. on the Monday. What did you make of that? Was it any surprise to you that the fact that Callum wasn't there, that maybe, you know, whoever was running the shop at that time couldn't maybe, you know, submit the financials?
No surprise at all.
No.
I have nothing nice to say about either of the two directors who have subsequently been removed, so it's probably best to say nothing. But the reality of the situation is that they've been doing nothing for quite a long time now, and they didn't even know how to do what was a simple scenario by the looks of things. Yeah, the shares have been suspended, and then subsequently the vote took place. And I suppose there's a bigger picture here. If you are up to be booted off the board, should you be allowed to continue to run the company for a period of time and string it out for as long as possible? Is that fair on, one, the company, and two, the shareholders? You know, the world has to start looking at this maybe, because effectively they've run amok in terms of what's happened. And I've had a few conversations with Callum. He's obviously very happy to be back in place and in situ, but there's a mess now to sort out, because basically they didn't know what they were doing, because they hadn't been running the business anyway. And Callum had been running the business. But the question I pose is, if two of the directors are up for being kicked out, then how can they continue to run the company for that period of time?
Yeah.
You know, because what's happened is that then suspended the CEO who was running the company on charges that didn't exist, quite obviously, because he was reinstated within several hours of this vote taking place. And I'm very frustrated, but at the same time, I'm extremely happy now that...
Draw a line in the sand and move on, and hopefully, let's see what the company can deliver in terms of, you know, all the vapes and recurring orders, and that's what it has to do now. And Callum, I bet Callum is absolutely delighted to have been vindicated, you know, whatever word you want to use, exonerated from the fact that, you know, these allegations against him, which obviously appear to be unfounded, have been cleared, and he's now been reinstated as CEO as from the 4th of June of this year. So yeah, very, very, very positive to see that outcome. As you said, he probably wasn't in any doubt in terms of the amount of support it had from high net worth individuals, some of the big investors, the TL1 holders. We know obviously quite a few people on the groups have got significant amount of shares, maybe just under the TL1 area, but all those votes for were came good in the end. So good news to see.
I mean, the scenario is that, yes, the company has massive opportunities. It's just got to make the most of those now over the coming months and years. And I think it will just become a money machine if that is the case, especially now we've got rid of a big layer of costs as well in terms of the American directors and the people who are organizing stuff over there. So it's going to be a much more UK-centric company. Doesn't mean that the opportunity is lost in the US at all, because I think there's got some big opportunities in the US. So yeah, let's see where that all plays out. Don't think it'll be quick, because I think there is a real big mess to clear up. But yeah, let's see what happens over the coming weeks.
Yeah. Okay, let's move on to the next one. So Incantera, obviously we caught up with Tim McCarthy, chairman. They announced on Monday and an update on the commercial update and subscription. They effectively was a share sale, wasn't it? Total £4.1 million in total. Obviously, so some of the shares were transferred, or IMM, MU Pharma sold circa 1. I
think it was about 1.5 or 1.6. No, 1.5 million to MU Pharma, and 2.6 million was raised on the market.
Yeah.
So 2.6 million has come to the company, basically. Let's say 2.5 million probably after costs. Another number of shares, I think it was about 16 million shares have been issued. We're now going to be up to 115 million, 116 million shares. In my view, this has got to be one of the stocks of 2024 and 2025 and so on, because I just don't see anything but blue sky ahead of it. The order book's gone from 25 units to 50,000 units to now 100,000 units in a matter of 2 months.
Yeah.
That's just within Europe. And then they've got 250,000 minimum order for Asia, which looks like it's probably going to be more. Tim refused to say it was going to be, what number, because he doesn't know. But that's going to put them with revenue well in excess of the 10 million that they already said. So you could be talking 12, 15 million of revenue, 30% of that as profit just in the first year's trading. And then, the whole thing moves. And then it becomes a pharma, ultimately, because, this delivery system is going to help people with skin cancer, with lots of different things in terms of people's skin, because they deliver effectively directly into the skin. So, yeah, very, very bullish on it. Obviously, things can go awry, but I don't really see how here, to be honest, now that we're in this.
I think that the de-risking part, I'm not saying it's not de-risked to a certain extent now, but obviously the launch is being geared up for September. So that I think they need that, they've, as you mentioned, they've got the additional 50,000 units which are being manufactured, and they're on track for delivery to Marionard for the September launch. The revenue from that first production order is obviously, as you just said, is effectively increased from circa £2 million to 4 million. And then the revenues for the current financial year ending in 31st of March 2025 are going to hopefully exceed the previous guidance and exceed the guidance of £10 million. So, I mean, where would you put a P ratio or a multiplier for a company that by end of Q1 next year potentially are going to be on for revenues of £10 million?
Well, you got to look at earnings, because that's obviously what the PE ratio is all about, So if earnings are approximately 30% of that, and we use to, I don't know, let's pick a number, let's say 12 million, then you've got earnings of 3.6 million in terms of profit. So in a fast-moving consumer scenario like this, in this cosmetic area, you've got to have a PE of a minimum of, and this is in established brands, of 15 to 20. In the growth phase, you could have 30, 40, 50 as a PE.
Yeah.
So, I mean, you do the maths, even if you use the 20, you're talking about a market capitalization of 72 million. And as Tim said in his presentation that he did with us, we're worth, sorry, not with us, a presentation that he did with all of the Aquis companies, that you're worth, he knows that they're worth considerably more than they are now. I mean, market cap now is about, what, 25 million, something like that?
Yeah, circa 25 million once it's fully diluted with those additional shares. Absolutely. So yeah, no,
So
it does look.
even based on that first year, which will end in March next year, you got to be looking at a market cap of at least, say, 70 million. Then the following year, you're then talking about 35 to 50 million of revenue. So you're then talking about 10 to 15 million in profit. And if you use the same calculation, then you've got a market cap of what? You've got a market cap of 200 to 300 million pounds.
Yeah.
It's 10 times what it is now. And, that's only 18 months away. And then that I think, I don't want to wax too lyrical about it, but that's without a deal for the US. That's without a deal for South America. That's without a deal for Australia. That's without a deal for probably places like the Middle East, places like Japan. We've got Asia as in China, but not necessarily some of the other places. So I don't know. It's like such a blue sky situation that I can't see that it's not worth like many, many multiples of what it is now. Many multiples.
Okay, so yeah, the other one this week was Energy Pathways. They gave a company update, and they talked about the report and following the North Sea Transition Authority, the NSTA, which was published on 29th of May, a notification for gas storage applications for an area that includes the Marram project. It has formally confirmed with the NSTA its interest in intention to make an application for a gas storage license in the area. So as previously was announced, the company has submitted the out-of-round license application request to the NSTA in relation to two prospective gas storage areas that incorporate the development-ready Knox and Lowry gas fields that, like Marram, offer prospective gas storage potential. EPP believes that there is a compelling future commercial opportunity to integrate all three potential gas storage projects as the natural follow-on from developing the Marram project, and where they see significant benefits in integrating them all at an early stage into EPP's wider growth plans to develop a UK-Irish Sea energy storage project, as described in the company's announcement dated the 16th of May. Ben Klube said, "We're very pleased to have confirmed our interest with the NSTA for a gas storage licence area covering the Marram project, and we believe our technical operating experience, coupled with our commitment to environmental stewardship and strategy to transform EPP into an effective integrated energy transition company, positions the company well in this application process. We continue to maintain an active and constructive engagement with all relevant authorities as we seek to convey how the gas storage potential fits naturally alongside the Marram project and our longer-term vision to develop energy solutions that will support many key elements of UK energy policy." So what did you make of that, the announcement on those storage license applications?
Yeah, I mean, it's just another string to their bow, isn't it? I mean, for a company now that's worth 3.4, 3.5 million pounds, to have this many opportunities and this many different ways forward with the potential for the gas in the Irish Sea that is so required in the UK, it's a bit bizarre, really. And obviously the storage facilities there underground, as they basically pump the gas out, they can then store more gas in there as well. I think it's going to be a no-brainer because people are going to pay for it. So yeah, I can see a lot of potential with it. Obviously not a lot of others do at this moment in time, but maybe that's the opportunity that people need to look at.
Okay, the other one was COBR Resources. They had an RA, it's probably more or less a week ago now. We didn't really mention it on the last, that we talked about it a little bit with Charles, but I think it really just highlighted that Boland, their asset that over in Australia is shaping up to be a company-making project. And it's all about the amenability of the geology to this ISR, this in situ recovery that has the ability to make it unique and commercially competitive. And I mean, that's already been demonstrated by the uranium industry, that ISR mining is effectively can be deployed in the South African sort of paleochannel systems, where capital, operational, environmental costs are materially reduced compared to the hard rock mines. So, and then they announced in these Boland re-assay results, and I think they've cost-effectively defined, scaled, and de-risked the planned resource. So I don't really think the market got the gravitas of that news release.
Yeah, no, I don't think they did at all. Either that or people are just not reacting to stuff. I tried to and get Rupert this roast, but he was in the field, so he's off doing stuff to do with this. So yeah, hopefully we can catch it.
Yeah.
catch up with him shortly. But yeah, I think it's very interesting. It would obviously be better to hear it from the horse's mouth in terms of himself. But yeah, I think it's one of those that could be, monumental rise, I think, in terms of its valuation. The interesting thing, which I keep saying to people, is that it has the gold asset with a JORC report similar for a sizable gold project. The valuation of the company is probably not even the value of that gold project, let alone these rare earth projects.
Yeah, there was news this week on Tungsten West. It's always one that sort of piqued my interest, this one, because I remember them coming back to market. This was the mine that's down in Devon, the Hemerden tungsten and tin mine in Devon. And I remember it was run by another company before. I think they were run privately, and they never managed to get this mine into full operation. And it was care and maintenance. And then Tungsten West came in, listed probably 2 or 3 years ago now, with the mine to change the processing facility and take it out of care and maintenance and put it into production. But they never really got off the ground. And it listed, I can't remember what it was, but it was certainly into the 10s and 20s and 30 pence, probably 40 pence region. And here it sits now at about 4.5 pence with a market cap of around £8.5 million. And they announced some big board changes in the week. They announced that Neil Gawthorne resigned as the CEO with immediate effect. He remains a director of the board pending finalisation of his settlement agreement. And Mr. Alistair Stobie will retain the role of the CFO, the Chief Financial Officer, and he will assume the position of the interim CEO and join the company's board of directors. And then they've announced that obviously the Nomad will do the due diligence on that. That's Strand Hansen. And also that basically the company has now commenced the process of appointing a permanent CEO under the prerequisite, obviously, for AIM rules and companies, so the schedule. So David Cath, the non-executive chairman, commented, "I would like to thank Neil for the progress at the Hemerden project that's been made under his leadership, especially in respect of right-sizing the project. Cost base, whilst the updated feasibility study is finalised, obtaining lifting of the tonnage cap for truck haulage of aggregate and obtaining the draft environmental permit for the mineral processing facility, the last outstanding permit required for the restart of mining operations. We wish Neil all the best for his future endeavours." So, it
IPO'd at around 60p, I think, and then at its highs it was 70-80p.
Yeah,
and obviously now we're at 4.8p. Has been lower, I think, as well.
And there's a whole new board change going on there, as you've just seen that. I mean, what do you make of that? Do you think it's a case of that literally that they're not last chance saloon, but what are they doing there?
Don't know, but we know we need the tungsten, so it'll be an interesting story to follow. Maybe we should try and catch up with them. We'll have to try and contact them.
Okay, so anything else you want to talk about this week?
No, not really. I think we covered quite a few angles there, didn't we? The Aquis stuff was very interesting. I think Alkemy Capital is, again, one of those blue sky stocks. I think if you really believe in it, then wow, it's an opportunity to buy right now, I think. But
about this mezzanine financing now, isn't it? That's the reality of it.
That's the next step, and once he's got that, then the blue sky is closer. Obviously, it's not like in the bag, but it's closer. And I think we'll see quite a bump if that comes in. And there is movement. The market had a bump up there, especially in the resource market, didn't it? And has settled down a little bit again. But I think it's only settled down for a period, and then it will go again. But let's see what's happening.
Yeah. So what about sport? We saw, do you see that USA pulled off one of the biggest shocks in T20 cricket by beating Pakistan?
I sort of saw the headline, but didn't actually read it. But there you go. That was interesting.
That was good. What about Southgate as well? Southgate showed his ruthless side. What do you make of these?
The England squad. Well, I mean, Grealish has hardly played for City, so did he deserve to be in it? Not really.
My opinion on it is, I think it's a big mistake because he's a danger, is Grealish to me. But that's just my opinion. I think I'd rather have him in than a few of the other players he selected personally. But
no, yes and no. And Maddison's been injured, didn't really come back firing on all cylinders.
Your favourite player has been dropped. Maguire's been dropped.
Yeah, well, it's like, but the interesting thing about the defence was they haven't got a real standout other centre-back.
Other than Luke Shaw. But to be honest, Luke Shaw has not played enough.
No. So why didn't they keep the Liverpool lad, Quasra or whatever? Because he's been exceptional in the last end of the season. I was a bit surprised if Maguire wasn't in, why they didn't keep him, because who's going to play centre back with Stones? And if Stones gets injured, they haven't got any centre backs. They're going to be playing 4 like wingers across the back.
Yeah.
So yeah, centre back is definitely the position. But I mean, up front you've got Saka, Foden, Kane, Watkins, Tony. I mean,
Mainu, the United player, young lad's made it through. He's looked sharp.
And you got Bellingham, Cole Rice, and Alexander-Arnold in the midfield. Like, I mean, it is impressive.
Yeah.
It's
a very young squad, that's for sure. It's good. But they've got experience. So
yeah, centre backs are the problem. Let's see what happens.
But what about the decision that Premier League clubs voted 19-1 to keep VAR next season? We've talked about VAR. I mean, I'm shocked it's so as high as that.
Yeah, nobody basically supported Wolves, did they? I mean, I wish it wasn't there, because that moment where somebody scores and you go mental, isn't there anymore.
He's removed. Yeah, you've killed the game. You've killed the excitement of the game.
There anymore for supporters, and I think that's going to be a death nail in football in general.
Yeah,
I really do. I think the excitement is just delayed. That adrenaline rush is not there. But anyway,
okay. Well, on that note, you go and enjoy your weekend, your fish and chips or whatever you're going to do. Enjoy your roast, enjoy your Irish. You're going to hopefully have an Irish beef with the professor.
Yeah, not with the professor, because I don't think they're going to be travelling up to Fermanagh. But yeah, with Carroll and Kevin, the geologist, I think is who we'll be meeting.
Good.
So yeah.
Well, if you like what you've heard, hit the subscribe icon and also the bell icon for future notifications of any future episode. Thanks for listening.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.